I wanted to talk about the challenges that veterans have when they put an offer on a house. They find that house they want to live in, they have a great vehicle in the VA loan. They put the offer, and then listing agents and sellers put the VA contract at the bottom of the pile. And nothing makes me crazier because veterans have served, they have assured you they have paid more for their down payment than you or me if you didn't serve. They literally got their down payment with blood, sweat, and tears. So the idea that their VA loan is somehow inferior makes me nuts. Shouldn't it go to the top of the pile since they're service members? So anyway, part of my job is to help folks get an understanding of sort of busting all those myths that are out there that listing agents and sellers think when they're selling to a veteran. It's an honor to help a veteran become a homeowner, and I'm hoping that we can all be together in making that happen. So there's 5 basic myths that I see in this environment for VA veterans. One is that listing agents tend to believe that VA contract is a weak buyer because the buyer isn't putting down a big down payment. And that's absolutely not true. Again, they paid way more for their down payment than just cash, blood, sweat, and tears. But also the veteran borrower is a very strong borrower. They have credit scores in the 700s. They end up having more money than cash than we do after closing because they don't have to put in a down payment. They don't have monthly mortgage insurance, so their debt to income ratios are better. They generally have more income than the rest of us. They have guaranteed income very often. If they're retired, they have guaranteed retirement income for the rest of their life. If they have disability, then they have guaranteed disability income. So like the rest of us, they can't lose that income. They can't lose their job and not be able to pay their mortgage payment if they have retirement income that they can use to make their mortgage payment. And a lot of veterans do pay their down payment. 28% of veterans pay their down payment anyway on a VA loan. They generally have better credit than the rest of us because the military teaches you to pay your bills. They teach you to be accountable. So not everybody does that perfectly, but there's absolutely lesson process that they go through. If you have income coming from retirement as a veteran and you don't pay your bills, then people can sequester those funds. They can create a judgment against you. So veterans have all the encouragement in the world to pay their bills. And they have a lot less student loan debt than the rest of us do because they have the GI Bill. I would say that a borrower who's not putting down a down payment who is a veteran is definitely not a weak buyer. The second myth that I hear a lot is that VA loans are harder to get through underwriting than other loans. So I wanted to read you this statement that is in the VA handbook. It says, underwriters are encouraged to consider every possible appropriate factor in seeking a proper basis for approving loan applications for every qualified veteran. This is an extremely different situation than an underwriter for FHA or a conventional loan. An FHA or conventional loan underwriter, it's their job to protect the firm from making a mistake and writing a bad loan. VA positions VA underwriters that it's their responsibility to do their very best to help the veteran become a homeowner. And that is a very different mentality. So there's a lot more flexibility in things that we can do for veterans than any other loan program. Couple of examples. I had a veteran who had just gotten a $100,000 tax lien on his Social Security number. Now, normally, you couldn't buy a house with a tax lien without a lot of stuff, but if you had made 12 payments on the tax lien in a payment plan, you could. Well, the tax lien was just going into existence, so we didn't even have a single payment yet. So we made the case as to why we were going to do this based on the facts of all the different things that had happened along the way. And so we were able to document all the things that he had done to try to negotiate the lien, that he had paid his taxes for the last 5 years. This was an old amount, that he had This was during COVID, so he wasn't able to get the IRS to respond to him. So it was an exceptional situation, and we were able to make that decision because the VA trusts the underwriter to make the best decision for the veteran. No other loan program would have given us that kind of flexibility. So VA loans are not harder to underwrite. They just take the right touch. One of the things I think that this whole thing is about is that who you work with matters. And so if you work with people who are passionate and dedicated to VA lending, then your veteran and your seller and your listing agent can have a great experience. If you're working with people who only do one VA loan a year, then it could be bumpy because it is a different animal. So just work with the right people and you can have a great lending experience. So myth number 3 is that VA loans take longer to close. That is not the case. Our average application to clear to close is 23 days, and our firm will even guarantee a 21-day VA close. So the only reason it takes longer to underwrite is if the pre-approval wasn't done right in the beginning. The only thing that makes it a little bit longer is that the VA appraisal can take a little bit longer. But other than that, it's just like underwriting a normal loan if your loan officers know what they're doing and they know how to anticipate what underwriters are going to need. The 4th myth that I hear all the time is that the seller has to pay the veteran's fees. That is not the case. Really what it means is that the lender has to pay the veteran's fees. So yes, the handbook does say these fees cannot be paid by the veteran, but it doesn't say that the seller has to pay them. It just says the veteran can't pay them. So if the loan officer sets the loan up correctly in the beginning, then there's not an issue that comes to the end where there's some fees that need to be paid that aren't accounted for. The loan officer can work all that out in the beginning when they set up the file, and then you don't have to worry that you're gonna get that last minute call that the seller has to come up with $1,000, which I think that has happened a lot in the past. The 5th myth is that appraisals are tougher. This is the only one that I think has a little bit of legitimacy. You do have to have the right people on your team to navigate the VA appraisal process if the appraiser doesn't agree the purchase price. So there's 2 different things that happen on a VA loan. One is that if the house is not going to appraise, then the VA appraiser will send an email called Tidewater to the lender. And they will ask, that's basically telling the lender that they don't think that the loan amount is going to be there or the purchase price is going to be there. The loan officer has 48 hours to get some comps and send them back to the appraiser to consider. Well, in that process, those comps have to be in a very specific grid. And a lot of times, if you're working with companies that are not VA focused, they might not notify you in time to manage the Tidewater. They might not tell you about the grid process, so they might accept your comps and send them off to the appraiser. If you do that and you don't follow up with the grid, then the appraiser's not going to pay attention because they require the grid. So we will fill out the grid for you. You just have to give me the comps, help me understand how you came to the value, and then I can defend it for you. If the appraiser still comes in low after Tidewater, then there's something called the ROV process, where you can appeal directly to the VA. The VA has underwriting managers in the appraisal department that can increase the value of the appraisal up to 15% without even going back to the original appraiser. We have been extremely successful on getting approvals for ROV. So basically the underwriter and us, we make an appeal, we fill out the right paperwork, we send it, the VA responds. We have had great success with ROVs this year. So the net of it though is that you have to have a lender who knows how to do an ROV. You have to have a lender whose underwriter is willing to do her part or his part on the ROV process. So the net of it is that VA loans are amazing benefits for our veterans who have served us and deserve to be homeowners. And having the right people on your team is the best way to make that happen and have everybody in the transaction be happy at the end.